We've got with us Srikanth Kanhere, CFO, and Angshu Mallick, MD and CEO of Adani Wilmar, joining us to talk to us about the quarter behind them and what lies ahead in FY25. Thank you, gentlemen, for joining us this morning on NDTV Profit. Mr. Mallick, I'll start with you. It's been a good quarter for Adani Wilmar. You've seen an increase in volumes, double-digit growth on the volume front. Exports have also done well. You've increased market share. Key highlights for this quarter, and what's the outlook in terms of guidance for FY25 on revenue?
First, good morning. This quarter has been good in terms of consumption. Staples consumption in country has been good, although it was a heat wave across the country and the election mood, but still the staples consumption was good. That edible oil prices remain stable and more welcome by the consumers, because after the high prices last year, same time this year, the prices were stable. Consumers found that out of all other products, edible oil was one such product.
Mallick, I think I've lost your audio.
Yeah, I think we
have.
Yeah,
I think,
lost.
Mr. Mallick, we cannot hear you.
Hey, can you hear me?
Now I can. Now we can.
This quarter was, I would say, apart from elections and the heat wave, the consumption story was still intact. And we did see both urban and rural consumption take place. Exports were good. Overall, prices remain stable. Consumers also like it. And as the brand, we feel the brand stability is much more when the prices are stable. So overall, a good quarter for us. Looking forward, everyone is predicting, and we also feel so, then the rural economy will come up, and that is everybody looking forward to. We also have more than 31% of our business coming from rural markets. So we are looking forward to a bigger consumption story in the rural. Urban market on the corner early this year, and then we have a very big wedding season this year. The summer did not have, but the winter we have a very big wedding season, and consumptions out of home consumption increases. We are in edible oil, basmati rice, maida, atta, sugar. All these products are consumed outside home also equally well. So we see a good year, FY25.
Feel like over the next couple of quarters, growth could beat the quarter that we've seen behind us. And the reason I ask you is because what you indicated, right? You're also going into wedding season. The market share of branded products is also going up significantly. You've already done significant volumes in Q1. Going ahead, is there an upside risk to that?
No, I think the volume story will continue. Consumption story, we are confident. In food, we have done well. Take out the little bit of G2.
Mr. Mallick, we cannot hear you.
Yes, food,
now we can.
19% G business that we did. Now, honestly, this kind of growth we have been doing for the last 8 quarters, and we are confident that this will continue. People's getting more into brand will surely happen as we go forward.
Right. Srikanth, morning. If you could come in on the pricing environment at this point in time when it comes to edible oils. You know, last quarter we spoke about pricing environment. It was challenging. It does seem like things have improved, but you can correct me if I'm wrong here. That and the implications that it has had when it comes to operating margins here.
Yeah, so I think the quarter which has gone by, I think the prices have been range bound. I mean, moving between $100 to $150 kind of movement, which we saw in most of the oils. And if this remains range bound, I think the things are going to be good for us. Our outlook is that the prices would remain range bound for next couple of quarters. We don't see any much events coming up in terms of geopolitical issues or any other event which may have impact on the commodity prices, and therefore prices remaining within range bound, of course, is better for the brand. So that's our outlook. And as far as the operating margins are concerned, I think we have been doing so far good. Last 3 quarters, we have been able to clock whatever normal run rate of operating margins which we were able to do. This time, in fact, we had been able to clock one of the best ever operating EBITDA of plus of 600 crore. So this going forward, I think our numbers should reflect in the rest of the couple of quarters.
Srikanth, your margins have improved significantly in this quarter. And I think like Agam indicated, when you spoke the last time, you did say that a lot of the pricing pressure is probably behind you. As we look ahead and with commodity prices also remaining fairly range bound, is it a fair expectation that margins will only improve from year on? You've done about 3.7, 3.8, which is fantastic, right?
Yes, I think in our business, the range bound prices, no too much of volatility, and commodity prices really does help us when you have a brand in place. Brand itself is a very big hedge for us. So I think this is something which we have been saying for the last couple of quarters, that the margins per ton of gross margin of close to 11,000 rupees a ton and EBITDA of 3,600 rupees a ton is something we should look, provided we don't see any geopolitical issue impacting any kind of commodity volatility in terms of prices are there.
Right. Mr. Mallick, and also an update on how things are faring as far as the FMCG business and your industry essentials are concerned. What's the way forward, growth plans that you have in mind at the moment?
See, in industry essentials, three major parts. One is the oleochemical business. The second is the castor oil. And the third is the animal feed supply for rapeseed meal, soya meal, and then rice bran meal, all these extractions that we do and that we do in domestic as well as export market. Come to oleochemical, this is one of our good business and consistently profitable. Grow recently business, which is our derivatives and value-added oleochemical products, specialty chemicals it makes. So we feel going downstream will help us. As you are aware, we produce almost 25% of India's glycerine and around 32% of stearic acid of the country. And we have very large oleochemical setup. Second is our castor business. And we export most of it. So we have a very steady market. So castor oil has been doing well and we are growing it there. Only thing is in the rapeseed meal, we did not do so well. Otherwise, overall, the industry essentials is doing well.
Right. So also, you've been growing quite well, as the numbers are saying. How much capex have you earmarked to ensure strong manufacturing and distribution? Because the key to more growth is penetration. So give me an understanding of what are the capex plans for 25? Either of you can take it.
Okay, I'll take that. See, we are already on a capex plan of close to 2,200 crore, which we had kicked off after an IPO. So besides that, IPO also have been getting into a couple of more capexes. We would be putting up one more oleo complex, Krishnapatnam. So most of our capex right now is going to have addition to the food capacities. We are building one of the biggest integrated food park in Gohana, Haryana. So all these capexes of IPO plus non-IPO close to plus of 3,000 crore should get delivered. Half of them get delivered by end of FY25, and then the rest of them should get delivered by FY26. So that addition to the capacities would certainly help in our food business as well as our edible oil business in terms of flour capacities. Krishnapatnam would certainly help us in industry essential capacities.
Okay, well, we leave it at that. Thank you both for joining us and taking us through the quarter gone by, as well as what we can expect going forward. Well, that's the management of Adani Wilmar telling us about substantial improvement in the demand environment going forward, which could, of course, play as a tailwind for the performance of the company as well.